Well, happy Monday. It's November 20th. Want to bring you the latest data here in the Austin metro area. By the way, I know my video looks a little different. We've spent probably 2 hours today trying to solve my desktop. It's not allowing me to do videos for some software reasons, so I switched to the laptop. So let's take a look at mortgage rates. Right now, they've come down a little bit. We had peaked up maybe 3 weeks ago, around 8%. Since then, we've seen rates really come back down. Now they're below 7.5, sitting about 7.38%. If I flip over to all the mortgage products, we're now starting to see, on the 15-year or maybe on an FHA, getting down into the high sixes. I like to see that. I don't know if this is a trend yet, so we're going to have to watch that. But for now, we're seeing interest rates start to soften as we're heading in towards the end of the year. Again, hopefully that is a trend. Want to share with you, this is some data from Austin Title, and because I'm on my laptop, I can't get my video in the right spot, but we'll start with this chart here. So let me see if I can pop that open for you. There you go. So this is looking at closed sales for the last 5 years. The red line is 2023, and what you're finally noticing is that we're kind of, for October, we kind of fell right in line with what we sold last year. Not great, still very much below where we were in the pandemic in terms of closed sales, but we're kind of neck and neck with what we saw last year. In terms of October numbers, units sold, we're down less than 1% off last year. Average sold price is down about 5%. Days on market, we're up almost to 70 days on market for October, and that's up a good full month from what we saw in 2022. And finally, median sales price, we're sitting around 428,000. That's just under 7% from where we were last year. I want to show you this down here. This is year-to-date sold data. So that's a little different. This is looking at everything from January 1st through October, so 10 months combined. So we're going to look at 2022 and 2023. The first 4 months of 2022 were red hot. We were still in the pandemic tail end of it. Properties were selling in one weekend, multiple offers, and then it flipped on a dime when the interest rates went up. By May and June, the market had really started to cool off. And the second half of the year is where we saw inventory build up and the rates build up and all that. So for last year over this year, we're down about 10.5% for those 10 months. Average sales price is down about 8.5%. We talked about days on market a second ago. We're seeing that still up. Again, coming in close to 70 days on the market. And the median sales price is down about 10%. Those numbers are a little higher than what I just showed you because by the time we got to October of last year, we were already on the downward, so there's not as much gap between October to October. But when you take in that first quarter of 2022, it's raising those 2022 numbers up. And then here's some more data. This is looking at currently active data year over year. So right now we have more inventory, 11,800 homes on the market, than we've had at any point in the last 13 years, and that includes going all the way back to 2010. 2010, we had about 10,900 homes on the market. We're almost another 1,000 homes higher than that, and that was 2010. So, that shows you that we're in the next cycle, the next slowdown. We're in it right now. We've been in it since the second half of last year. So I don't think we're just starting this. I think Austin's kind of deep into it, and we might even be rounding the corner next year. We'll have to wait and see there. Pending is the same story on the other side of the coin. We have more inventory than we've seen in 13 years, but we also have fewer closed sales, which is part of the reason we have more inventory than, again, we've seen in the last 12 or 13 years. We've only closed in October 2,400 homes. The last time we had that many few homes sale was in 2011. We had 2,550 homes, so even fewer than 2011. So again, that's just showing you that how much the market has slowed down. I do think some of this is seasonal as well, but we're seeing those differences in those years. I found it interesting that we're peak inventory and fewest sales than we've seen in 13 years. This is a look in real time. This is original price versus sold price. So the green is list price. Think where sellers are trying to mark their properties. The blue is sold data. This is actually what properties are closing for. So kind of the peak of this year, 475, that was June. June closings tend to be your April, May buyers that are closing in June. And then we've seen the price just meander down. We're sitting right at this moment around 431,000. And that's very typical. On any year, I can show you a bell curve. Prices tend to go up in the spring. They're going to come back down late summer through the fall and winter, and then they're going to start again. I think year over year, we're sitting going to be kind of flat. We might be a little down by the time we get to the end of the year, but right now we're trending with kind of where we were in February, which was 430,000. We're sitting right about there. So we went up a little bit in the spring. We've come down back to that point. So a pretty flat year overall. All right, well, I didn't want to leave rent out. So this is Redfin looking at national rent data. So asking rents, the top chart is median asking rent. This is nationally. You can see the pandemic, huge run up in rent. We came up from 1,600 up to over 2,000, but we're starting to see those numbers start to slide back down. Some of it's seasonal and some of it's just higher inventory out there. Here's the pandemic year over year change in rent. And we saw huge spikes for 2 years going up 10, 15% on a national level. Now we're seeing it come all the way back down. We're minus 0.3%, so less than 1%, but still we're just seeing rents finally kind of exhaust themselves and go flat for this year. This is rental vacancy. So again, you can see back in the last housing recession, we had some vacancy above 10%, but we had nice kind of filling up the apartments. We had low vacancy below 6% in 2021 and 2022, and now we're seeing vacancy just a little bit the last 2 years start to climb back up to kind of traditionally healthy levels of that 6-8%. We're still there, but again, as rent slows down, vacancy climbing a little bit. Here's apartment construction. So this is looking at, nobody was wanting to build apartments during the last recession. That was hard to get the money. You didn't think there would be enough demand for it. And then we had this huge run in building apartments all the way up to the pandemic. And then in the pandemic, another huge run. I think that's exhausted too. You can see this massive drop off. And I think that will continue to go down. We might get back down underneath the last 10-year trend on apartments because we built so many. The money was cheap. So it just kind of front loads that energy to build. And now we're going to see that demand come down. So anyways, I hope this is helpful. It's a lot to go over each and every week. I plan to bring these videos to you every single Monday. You can check them out on our YouTube channel as well at Ryan Kelly Group at YouTube. Make sure to check all our videos out there. But if you're planning to sell right now, obviously we're going to be in that slow season. It's winter. Things are slowing down. I expect we're going to stay that way through maybe early January. And then we're going to have to see what the market looks like. Interest rates are our friend if they can start to come down. So again, if we're starting to see a trend of interest rates softening, that's going to at least bring a little bit of tailwind to the buyers, which helps out the sellers. If you're a buyer right now, again, this is the slow season. We have more inventory in the winter than we normally do, which is good for you. So you have more opportunity to go see properties, maybe to bid and negotiate with some sellers to try and work out a deal. And of course, watch interest rates, because that's usually what most buyers right now are using as a mortgage loan. Make sure to watch interest rates and keep in touch with us so we can tell you what's happening week to week. Otherwise, hey, this is Thanksgiving week. It's my favorite week of the year. I hope y'all have some amazing plans with friends and family. I am going to be in Waco with my family for most of this week. But if you need me, you know where to find me. But happy Thanksgiving to everybody out there. Y'all have a great week, and I'll talk to you next Monday.